life is on edge right now, and I might be even a little more excited than usual simply because there's a thrill of me not knowing what the heck is going to happen at any moment. So all this to say is I am going to try to give you all the goods as fast as I can, because I just don't know if it will be interrupted. And we will again do the session if we need to at any given point in time, but I'm just going to trust that God has a plan, and we're going to go through our plan. What's really interesting is that I was asking my husband if we should cancel today's session because of the weather, because of everything that's happening. And he said, well, first, who are you presenting to? Because that also matters, because usually I have this lush green background and there's a logo behind me and all this stuff. And I said, well, I'm actually presenting for a church. They have financial literacy week. And he was just like, nope, you got to do it. You can't interrupt people's blessings. So as soon as he said that, I said, you know what? You are absolutely right. Yeah, I don't care about my background, and God's just going to make a way. And so I know that you're meant to be here, whether you're watching this live or watching the recording. Stick with us. I'm going to make investing something that you're going to see that you can't afford not to do. You're going to see that this is something that you actually are empowered to do, and that everything that you've done in your life has prepared you for the moment you have right now. So let's hop on in. So why is this important to you now? So we are in an unprecedented time where making money is simple yet confusing. So our income has increased generation after generation. People are making more money than ever in the stock market, and all these things are happening. But guess what? It might actually be a bit confusing. Anybody here gets confused when they think about money, or you think about investing or the stock market or even retirement planning? If that happens to be you, you are A-okay, because they didn't teach us this in school. A lot of times our parents didn't grow up also teaching us this stuff. And it might not even be their fault. It's just that a lot of these things weren't even accessible until, just say, recent years. And though you may not believe it, there isn't a fairy going around giving out blessings. And so we'll talk a little bit about this in terms of your mindset and the blessing fairy. Granted, you might be seeing things on TikTok from your kids, or hearing the news, and this person just made this much with Bitcoin, or these people made this much with Robinhood. And you're thinking, why can't I just make money? Like, what's going on? Everyone's getting blessed but me. That's not the case. And this is important because implementing steps today can really help you out in the future. And I know that they always say that. They always say, oh, it's better to start yesterday. But I'm going to show you that, no, really, we need to start this like now, because every moment that you aren't working towards your financial security and your financial goals, you are literally shaving hours of time that you could be relaxing on a beach, spending time with your family, doing whatever you want. You are trading that time because of your inactivity. But we're going to also push through all of that, and I'm going to make it fun and enjoyable. So with that said, why do you actually want to start investing now? I'd love to know in the chat why this is. And so why are you thinking about your money? What made you actually join in this training? What is giving you the resolve to get this figured out? I would love, love, love to know. And so I'm going to check it out and see what you all are saying. Awesome. All right, so we got a couple of things. We've got recent college grad. It's time to purchase a home. That's right. To have something to pass on for stability. Those are all amazing reasons. And these are reasons why a lot of people do it, and you want to retire early, you want a little extra money on the side, or a lot. And so what's the problem? So the problem is there's no one solution fit all for investing. There isn't a one-stop shop solution. And there are a million and one answers to one important question, which is, how do I get or sustain my wealth? How do I get rich? And when I started investing, this is what I did. I went into Le Google, which is my favorite tool in the world. Can't imagine how existence existed without it, which I'm sure we can because it wasn't here forever. But I went into Google and I literally typed, how do I become rich? And so this is the big question, but there are millions of answers when you type in that question. And we work so hard, but there isn't a map or a compass. So the problem, why is this important to you now? And so over the years, people have been figuring out how to make money. And unfortunately, it's actually been disproportionate. And I'm not saying that there's a right or a wrong or a plus or a minus, but for people of color, especially also for women, it has not progressed as much as it could have compared to other nationalities, other races, and other genders. And I'm extremely passionate about this because I myself did not look like the people that I had envisioned when you think about someone who teaches or handles money, right? And so when I had my impression of someone who teaches and handles money growing up, looking at TV or looking at the movie Wall Street, it was always like some, really power player, white guy, balding, old dude, putting his legs on a table, talking on this like big cell phone and like yelling out numbers. It never occurred to me that I could actually do something like this. And what strikes me even more so is that a lot of people who look like me or who come from similar backgrounds, they themselves don't even understand that there is this amazing wealth vehicle that you could use to progress yourself, to progress your family, and to make life easier. And one of the reasons I think that we're doing great with catching up salary-wise, but our wealth isn't expanding is because a lot of us aren't taking advantage of investing. And so why are you in the right place? Well, this is easier than you think. Honestly, it really is. You can do this. If you have a degree of any kind, if you've gone through the school of hard knocks with your actual life, you will find that investing in the stock market is not the most complicated thing in the world, and you're smart enough to do it. I'm going to show you how you can learn through personal stories, and I'm going to give you examples of real people and experts. I'm also going to show you how you can start leveraging your money, and it really is a mindset thing, but I'm going to show you an easy way to do it. And then at the end of it, I'm going to give you a unique opportunity so that you can get it all sorted out. And so over the last 10 years, a lot has changed for me personally. I've mastered long-term investing. I've created a 5-person company called the Happy Investor Method, and it's dedicated to breaking down investment strategies. I also invest in startups. I'm an advisor for startups as well. I utilize past experiences to create unique advantages. I've quadrupled my net worth over time, and I'm working on my 3rd room of my house. And if you have any questions about that, I do give trainings, tons of trainings. And one of my trainings, I talk about your house. And you know how they say you should have 7 streams of income? Well, for me, you should have 7 rooms in your house, and each room is another form of wealth building. And as you go through your life, you're kind of creating these streams, and it builds a beautiful house, which represents your life. And so personally, I'm extraordinary. And so what that means is, to me, extraordinary. I'm just like everyone else. I like to Netflix and chill. I love to hang out with friends and travel. I'm super passionate about my faith, about my family. And at the same time, I do other things that a lot of people might be afraid to do. And it's not that I'm impervious to putting my head out there and feeling scared. It's just that I really take joy in seeing what can happen if I just took a chance. And so I hang out with people. I create my own events and meetups. I literally try to create the world that I want. And so, like I mentioned before, I create the world I want so much that I'm the host of a conference called Total Wealth Live. This year, we didn't host it this year because of everything that's happening, but we are going to have a digital summit so that more people can come, similar to what's happening today. I am a regular in SiriusXM, and all this to say I am super powerful and proud of showing you what to do. We create tons of programs to help you do this, regardless of which stage of investor you are. And when it comes to my hearts, I say plural, is that I have two beautiful children and I'm a new mom. So, like, really new mom, as you can say. This was taking not too long ago. And I make cute babies. And those are my cute babies there. And I have a wonderful husband. And I love that I'm speaking to people of faith, because I do think that my husband was placed in my life and I was created for him to help each other push the mission that we all have in our hearts. And so I just am so thankful that God partnered me with someone that can understand my quirkiness and understand my desires to impact people. And you'll see later that I will reference this relationship again to make it easy. So why should you listen to me? Well, I have single-handedly bundled over $36 million in some way, shape, or form through the stock market. I have a record of helping hundreds. We've built six-figure portfolios. Folks call me the investor goddess, and all this to say you're in the right place. My strategies will allow you to start from scratch. You can invest with debt, because I've invested with debt. You can still have student loans. You can recover from past investment loss. You can double your net worth. You can bring it to 135% return. You can get the bigger picture, and you can have your money come back to you with friends. So, are you ready? Are you ready to do it? Let's get it. So, discovering your investment personality, which I think is one of the most important things to do. So, a lot of times we just hop into the investing pool and we don't even understand what we're doing. We have no clue about, should we be investing in this? Should we do this style of investing? We just generally have no clue when we're starting. So my goal here today is to have you understand what kind of investor you are and what style of investments are you going to be going after. And so what I'm saying works, and I love social proofs. I had recently posted this, and because of our techniques and our strategies and my personal style of investing, and you're going to find your style of investing too, our net worth grew over six figures, right? And I didn't really do anything. This year in particular was quite challenging. There was a pandemic. I was pregnant, and we had to take our daughter out of daycare, all these things. And in the background, while life was lifing, our investments grew over six figures in the stock market, right? So we had an increase of $155,000 because of what I am going to teach you. So this stuff works. And I'm not a day trader. I didn't start with hundreds of thousands. I still have student loan, and I'm not even like a super duper whiz kid. To be honest, my degree is in philosophy, right? And so I'm a philosopher at heart, but all that means is that I'm really great at breaking down complex things and helping you understand it. So what are some questions that stump you when it comes to investing? I'd love to know. And so what are some questions that you all have? Feel free to throw it in the chat, or even if you're sitting there thinking about it, what are some of the questions that you think of or emotions that come up when you think about investing? And so you can put emotions or even questions. And so some people wonder how to even start. Other people know, yes, I should start, but what kind of stocks should I actually use? People are wondering, like, is my advisor telling me the truth? So I may have an actual advisor, but I don't even know if they're telling me the truth. How can I actually turn money that makes pennies of interest? Any of us who have a checking account, and you see that little line item on your statement, and it's like, yeah, congratulations, you made $2 this month from letting us have your money. How do you actually make that into real things? And you might even be wondering, hey, I'm not a numbers person. Can I get this? I'm not a numbers person either, but I'm a money person. So there's a difference. Don't let your number fear block you from getting your money blessings. And so this is the happy investor method. So I want you to think about investing in terms of dating, right? And so this is the easiest way for you to process what happens, when it comes to the stock market. A lot of times people think of it as something that's this far off notion. However, when you think about it in terms of dating, I think it's going to make it a lot more clear for you. And so this is what I mean. You want to think of things passive versus active. So to me, when you think about passive investing, you have a lot more time to make mistakes. It's pretty much when you say, hey, I'm going to invest in something now, and in a year, 2 years, or 3 years, I'm going to get the biggest return. I'm okay with that because really I'm not starving right now. Really, I can have that happen. I can have my money just put there. And so to me, that is the easiest way. And I will tell you now, passive investing is the easiest way versus active investing, where you're going to have to figure it out. You can still be successful, but you're going to have to go through a lot of twists and turns. And that's where you have the big guys on Wall Street or gals on Wall Street who are manipulating the stock market and doing all those things. It is successful, but you're going to have to do a lot more to figure it out. So you want to think about your personality. Am I more of a passive or am I more of an active? Do I have a lot of time to be active or do I have just a couple hours a month to figure this out? Well, that's passive. If you have a couple hours a day to figure out, that's active. And so who here would think of themselves as passive versus active? I would love to know. And then at the same time, you want to think, are you short term or are you long term? So do you need the money infusion now or do you need the money infusion later? And there's a reason why I put this graphic. If you notice, that's not the dollar. Does anyone know what money currency that is? So this is the rupee. It's the Indian rupee. And the Indian rupee, the reason why I included it here is because I actually lived in India for 6 months. I had a 5-year visa and I went back 3 times. And I love that place. It's like, if you want to understand life, I think that's the perfect place to go to like really get thrown into it. It is like eating your vegetables for life. I mean, it is the high, the low, the ups, the downs, the beauty, the ugly, all of it, all mixed in one. But even more so, it's an emerging market. And so one of the reasons why I love long-term investing is because you can incorporate all of the experiences that you have into your investments. And I'm going to show you how to do that later. So an example would be when I was in India, I remember that all of these US companies started coming to India and they even started making cities in India so that they can control it and have cheaper labor. And I remember thinking like, wow, these are really smart people that they're employing to fulfill this labor. Whether it wasn't just customer service, it was like creating websites, doing tech, doing all these innovative things, and they were getting it for a fraction of the price than they were paying for US labor. And now I know some people may feel a type of way about it, but for me, I thought, well, if there's more money for the company, they can buy even more US labor later. But at the same time, I took note of these companies because I knew that they had more money on hand to put into their marketing, to put into their growth. And I invested in the companies that were actually there, having a presence in India. And so those companies actually did really well for me. And it did really well because I was a more longer term investor. Now, if I day traded the companies, it didn't necessarily have enough time to mature into that plan. And so that's why I will push for you all to do both. It's okay to be short term and long term, but always keep your eye on the prize long term because today was a tomorrow a couple yesterdays ago, right? I just said something there. Today was tomorrow a couple yesterdays ago. So always think about tomorrow. You want to also think if you're simple versus complex, right? And so I want you to tell me now. So if you're someone who can grasp things in a really complex kind of way, you understand things relatively quickly and can execute really quickly, you're not the person who like needs to get every single step right, then you want to think about that for your investment style. Or are you simple where it's just like, can you just break this down into like a couple steps so that I can go out, see results, and then make it work for me? Then you're going to want to do that. So, and it's okay to be both too, but you just want to think about yourself realistically. Which one are you? Are you more for the simple solution or are you more for the complex solution? And so let me know, are you simple or complex? Great. You also want to think of stock versus mutual fund, right? And so are you a stock person or a mutual fund person? Now, so this is actually where we're going to get a little bit into it. So does anyone know the difference between a stock and a mutual fund? And it's okay if you don't, I'm going to explain it, but I also love to know what other people know too, because sometimes everyone explains things differently and you may get it to click by hearing different perspectives. So a stock is ownership in a company, right? I want you to think about it in terms of a cake. And when you have your cake, um, let's say I love strawberry cake. That's my favorite cake ever. It doesn't even have to be like good quality. I'll take the box. Like I'll take Betty Crocker strawberry cake any day. And so imagine a cake, and imagine I was to slice it up, and each slice I'm going to sell it, right? And so I want you to think that this cake is actually a company. The company slices up itself, and it sells little slices. And those slices are called shares, also known as stock, right? And so that's a stock. And then on the other hand, there are mutual funds. And mutual funds, unlike, say, one cake, that might mean a basket of baked goods. And so you've got cupcakes, cakes, granola bars, whatever it is, and you buy the entire thing, you buy the entire basket. Another analogy that I use is jelly beans. So a stock could be one jelly bean flavor that you love, like say strawberry, and a mutual fund is going to be the whole bag of jelly beans. And in this jelly bean bag, you're going to have things like Apple, the company, not the fruit. You're going to have Netflix. You'll have maybe you'll have even companies that are like Amazon or PayPal. You'll have all these companies, and you can invest in all of them instead of just purchasing one. And so that's the difference between a stock and a mutual fund. When you own a stock, there are pros and cons, right? So it can go up or it can go down. But you get to choose which one you're going to get into. When you invest in a mutual fund, it will go up and down as well, but it's an average, right? You're actually getting a lot of things. And so in it, there may be things that are doing good or doing bad. Typically speaking, if a stock does really well, it's going to outpace a mutual fund any day, which is why I love stocks. I do both, but because of the method that I use, I purchase things that I'm pretty comfortable with, and they always outperform the mutual funds. So if you want hand holding, and if you don't want to actually understand the stock market, then it's okay to do a mutual fund. It's totally fine because you're just investing in things. And I'll show you examples of this a little bit later, just so you can understand it more. Or if you think that you know of really amazing companies that could make you a lot of money, then you're pretty much a stock person. And so which one would you say you are? Are you like a buy the whole jelly bean bag person? Or are you, I'm just going to kind of stick to this one cake or this one jelly bean flavor? Are you a stock or a mutual fund person? And this is how we're going to start crafting our strategies. Like if you don't mind researching just a little bit, or if you know of companies that you love, then maybe you're a stock person. If you really don't care what it is, you just kind of know it just like tech is on the rise, then you're a mutual fund. All right, a little bit of both. Very cool. And like I said, that's totally fine. And so this is how we break it down to a relationship level. And so I'll tell you a story. So when I was dating my husband, we actually met through a friend that I went to college with. And my friend and I were from the same church back home. And so I love that I'm talking to folks of faith because I could tell you the story, and it's beautiful. And so we actually met in church. And at the time when I met my husband and we were both in the same church, I was literally about to stop dating people. I was done. I told God, I was like, God, I don't know. These streets are crazy. I don't know if anyone here is in the dating market now. It's crazy. I don't know how you do it, but I just am not cut out for it. Like you just kind of know what you're cut out for. I just don't have the patience half the time because I'll just say like, screw it. I'm just going to go and just be by myself and just be happy. And so at the time when we met, I was literally saying, you know what? Maybe I'll just be a nun. Who needs a husband? Who needs to date? I'm good. And so, of course, God had other plans. And so at the same time, what I realized that as I was talking to different people or different potential matches, what I realized was I wasn't talking to someone that had the same goals as myself, right? And so for me, I knew that I wanted something long-term because I didn't want to waste my time anymore versus something like just a conversation or just to casually hang out, right? And so the same thing applies with your stocks, right? If you want something for a quicker return, then you're going to be more geared towards, say, the day trading, right? You're not going to own the company. You're going to own it for a little bit, and then you're going to sell it to make a quick profit. Versus if you want a company that will be with you over time and you get to learn them and develop that time, then that's more passive. And so are you the more stick in there person, or are you the kind of like, if it's not working, I'm going to give up and go to the next? And that's going to be a clue as to if you're a passive person or an active person. Because if you're a person who wants to kind of give up on your relationships, and not that giving up is bad, there are people where you're like, you know, I'm not going to mess with you if you cross me. And if you're that person who says, you have one chance, then you're probably going to be more of an active person. Are you looking just for fun, or are you going for marriage, right? And so this is short-term versus long-term. Like I said before in the story with my husband, I knew that I wanted something more long-term versus short-term. And that's kind of how I am in life. When I make a friend for life. I'm not kind of like just a little bit, even though we have seasons for people. I notice that I keep people for like decades, like I'm still friends with my high school friends, even though my sister told me that we wouldn't be friends after high school because who keeps high school friends? But you'd be amazed. We still are friends, decades later. And so this is an example. Are you kind of just for fun, or a marriage? Are you someone who keeps long-term relationships, or are you excited by the short-term relationships? There's lots of time versus limited time. And so if you've got a lot of time, and these are switched actually. And so if you've got a lot of time, then you're going to want to go for the more complex. If you've got a limited time, then you're going to want to go for the simple. So these are flipped here in the presentation, but this is what I mean. If you have a lot of time, then you have a lot of time to think about complex trading strategies. If you don't have a lot of time, then you want to go for the more simple strategy, like buy and hold, versus Forex, or versus a large, like, day trading, or even options. And then you want to think about you and me versus the group. And so do you want individual stocks, which is kind of like, this is just you and me kind of thing, or are you more of a group person where it's more of a community thing, like you enjoy community, in the sense that you rise together, you fall together, and you love doing things in community. And so that will also help you to understand whether this is a you and me, which is individual stocks, or a community, which is funds. Does this analogy help you? Is this making things a little bit more clear for you? And it is okay to be both. At different points in your life, you'll see that you have been both. At different points in my life, I definitely had short-term investments or short-term relationships, and other times I've had long-term. But you will notice you have a preference. And this is literally, once you figure out your relationship style, now we can actually get to the fun part of finding what your investments are. But you have to be clear with yourself and understanding your patterns and what you want it to become. So I have a signature paradigm called Get Paid to Be You. And many of the companies that I've invested in, and many of the funds and industries I've invested in over the years, it simply was because it reflected my values and it reflected points of my life. So in order to do this, you're going to assess your life to date and make connections and correlations. And so what I want you to do is I want you to invest with your interests. So here's a case study, Zoom. I have been an investor in Zoom, since January of 2020. It was only $74. And now Zoom hovers well over the $400 mark. Per share. And so remember when I said the cake slice analogy, how I love strawberry cakes, cake. Well, imagine if we had cake slices and one slice of cake was once worth $74. Well, now the slice of cake is worth over $500. Anybody want some strawberry cake like that? Yep. That's what happens when you invest in companies that you hold for a while, right? And so it's been over a year, and it's grown substantially over a year, and it's with my interest. So we're all on a Zoom call right now. We all take Zoom calls, right? And so you want to think about it. Wouldn't it make sense to invest in it? Zoom is so ingrained into my life to the point where I not only attend Zoom calls, but I host events on Zoom, because we're a company that's mainly online based, because I'm super passionate about reaching people where they are, to the point where you can be in your pajamas, I can be in my pajamas, and we can still, learn how to talk about money and investments. So I've been using Zoom for years. And because I've been using it for years on both fronts, I knew that it was a company that was only poised for growth, that more and more people were going to get into it. And since the pandemic, even more people have been using the platform. Now, here's a little bit of an advanced strategy. I know some of you might be thinking, well, is it always going to be this way? Is it always going to be profitable? Are people always going to be using it? Well, I want you to think about it. Do you really think we are all going to be going back to work through the 9 to 5, going back into biz offices like physical locations, now that employers know that they don't have to spend as much rent money housing their actual employees when they can just have them work at home and still get a good amount of work? Do you think we'll ever truly go back to that system the way it was? And if you don't think we're going to go back to that system the way it was, then Zoom is a logical thing to do, right? And so it's very logic based, as you can see. The analysis I just did wasn't based on numbers. It wasn't based on technical analysis where I'm talking about PE ratio or any of that. It was simply based on assessing what I know from the past and what I know now. Will this logically happen in the future? And that is a very basic investment strategy, right? And so this is a case study that worked. Now, on the fund aspect, and you know that I'm talking a lot about stocks versus funds because a lot of people don't know which one they should do or that they can do both. Here is the actual reflection of an ETF, which is an exchange traded fund. So it's a fund, but you can buy it on the stock market, similar to buying regular shares of any company. This one reflects, it really does reflect the entire market, right? It reflects the Dow Jones Industrial Average, which is a fancy word of saying 30 popular companies. You got Home Depot, Bank of America, Verizon, Disney, like all those companies in there. The ones that we all know, like everybody kind of knows them, that's in the Dow Jones. And so if you don't know if you want to invest in one particular company, you can buy a fund and buy the whole thing. And so this is like buying that whole bag of jelly beans that I mentioned. And I find that some people, honestly, when they say, I'm just going to go with stocks, or they say, I'm just going to go with funds, I think they forget that both can be profitable. And I'm putting this here, whether you're a beginner or an expert, I'm putting this here to remind you that no matter what we know to be true, what is true is that the market always rises over time. I mean, like 99% of the time, accuracy. And that's really good. It's like if I told you that there was a 99% chance for you to be wealthier a year from now, 2 years from 3 years from now, would you take that chance? Chances are, yeah, because that means there's only a 1% chance of failure. So there's a 99% chance that the market is going to be higher. So just investing in the total market is going to make you better off than just doing nothing and just waiting for, your checking or savings account to increase in value, which it's not. We all know it's not, right? And so this is something you want to do, right? And so you want to think about that. And this is the point where I didn't get to mention it before. I am not an investment advisor. I'm an investment education coach. And the difference is, beyond having like the 3 letters between our names and me taking the series this and the series that, is that as an educator, I have the liberty to share these things with you. Whereas if I was an advisor, I wouldn't be able to as much because I'd get into regulatory compliance issues. And I learned that because I used to work at Goldman Sachs, and the guys who moved the money weren't allowed to share how they moved it. They helped you move it. And so it's, of course, really amazing if you know that this is not for you. I'm giving you an understanding of investing, but you can take this understanding and go with it to an advisor, and you can share what you found and you can have a conversation with them. It doesn't have to be either or. You can still invest in the stock market and still have your advisor. I'm an advocate of just getting educated so you can make either one work for you. But that's the difference. And so as I'm telling you this now, I don't want you to say, Angela, I'm going to take my entire life savings and dump it in the market. Please don't do that. And don't call me and say, Angela, you told me to do this and I did this. And when the market does this like huge dip right here on the graphic, you freak out and call me. Please don't do that. Get yourself educated, get a real team behind you. But I am showing you that it's possible. And so does anyone think it's possible? If you think it's possible that you can be successful with this, just please say like, yes, it's possible. Because it is. And this is why I'm showing it to you. Invest it with the emotions you want. And so a lot of times, a lot of us, right now, it's a high stress environment. There are a lot of things that are happening. And so I know that I want to be excited. I know that I want to literally feel happy. And there are times when I'm down. And when that happens, do you know what I do? I actually invest in Disney stock, because what is Disney good at? they're good at making dreams come true, right? That's like their whole spiel. You are literally buying happiness. And so you can do things like that. Even right now, recently displaced, not being in my home. What am I looking at? I'm thinking, okay, well, global warming is clearly real, even though I'm really cold. Global warming is real. Things are going crazy in the world. Maybe this is a good time for me to invest in salt, right? Like things that plows, things that people will actually need more often, you know? Um, it's just a good thing to happen because this is the effect of global warming, what we're experiencing right now on a scientific level, right? And so if certain parts of the world are getting colder, like Texas, right? Well, guess what? People are going to start buying things that they didn't have to buy before. What are these companies? You can also invest in the causes you believe in, right? And so an example would be Black Lives Matters, investing in, and this is something that's really dear to me because if you can't notice, it's the color of my skin and my family and the people I love. And so I want to support things so that they can get examples that this can be them, right? It's not necessarily just investing in someone because they share my skin color and I want to support that. It's also investing in representation, that when my children go out to do things, that they're not this unicorn where people are staring at them like, wow, what are you doing here? I never saw someone like you do it. So that's why I invest in Black owned companies. This is why I invest in things, because it's just showing that it's possible. And it's making it so that in the future, this won't even be a conversation anymore. And so all this to say, what's the secret sauce in all of it? It's you. As you can see, I have very strong opinions, right? I have strong opinions, and chances are you're not going to meet another person that talks about money the way that I do, but that's okay, because I've used the experiences that I have to communicate to you that you can use your own experiences to create the world you want through money. And money is power. And the more we use our money to influence the things that we want to see in life, then that's how we make the world a better place. Y'all jiving with me? You rocking? You rocking? So I'm a huge, huge proponent of affirmations. And if you're rocking with me and if you're feeling what I'm talking, can you just put, I'm a money magnet? And you can say it in your head, I'm a money magnet, type it out, I'm a money magnet. Just put it in there. All right. So step one, of course, I have to break this down into steps, right? We're creating a method, we're creating an investment style. So I want you to think about what kind of investor you are. Remember when we went through the simple, the complex, the passive, the active, all those things that we were talking about. I want you to kind of start writing it down. What kind of investor are you? And it's not an absolute black or white thing. There's a whole lot of gray, but you will see that you tend to one more than the other. Step two, I want you to track your journey. So I want you to think about where you were 10 years ago and where you are now. 10 years ago, I was, living in my mom's basement, working a deadbeat 9-to-5 job that I hated, like hated. I prayed every day, dear Jesus, please take me out of this situation. Take me out, take me out, take me out. Please take me out. And God showed me many ways and liberated me. But to where I am now, so many things has happened. I started out with a jewelry business that I sold on Etsy, to the point where now I own Etsy stock because I used to sell things on Etsy and I know about the company, right? And so all that to say, track things that you did in your life, put the positions you had, put the relationships you had. If you noticed that you purchased things, how did you feel about it? Is it still there? All these things, start mapping out your journey. Write it out. So you want to think about your journey, then you want to write it out and think about the connections. That's step three. Step four, I want you to find your loves. I want you to match your journey to the companies and sectors. So an example that I gave you was that, 10 years ago, I was living in my mom's basement, working at a deadbeat job, and I started my first business, which was a jewelry company, a handmade jewelry company, where I'd just make things and I'd sell it in markets, but I also heard about a place that I could sell it on Etsy. And when I thought about all of this, and I remember selling things on Etsy, and it was my first time selling things online, that company has grown significantly. I mean, significantly. So I purchased shares for like 40 something dollars. And, now Etsy stock, I'm very in the moment person. And so Etsy stock is now $228, right? crazy. But I purchased it and I keep investing in it because I think, what did it do in the past? What is it doing now? And where do I think it's going in the future? And I think people are going to continue buying Etsy. They're going to keep buying things online. And so when you start finding these threads, that's why you have to actually take a and start matching and connecting the thread through the method, then you're going to actually find the companies you love. And now when you have to do the technical analysis, and yes, numbers matter, but I'm only doing the numbers to justify what I already know. So I'm not just going to flat out buy Etsy without knowing, hey, is this company in debt? What is going on? Did they miss their earnings? All that technical stuff that I'm not going to push you down with right now. But I'm only doing that to justify. So an example of this would be, like I said, when I met my husband, there was a moment when we were first dating. It was our third date, and I looked at him. We were hanging out in my mom's basement, and we were hanging out, and I simply just looked at him, and I said, like, "Oh my gosh, it's you." And I remember this moment so clear and so vivid, and the emotions are still here with me in this very present moment, because I remember thinking, through all the times I thought that I wouldn't find someone, and all the times that I had created all these alternate realities for just being by myself. And when I finally, our spirits connected and I realized it was him and I said it, I was really scared. And that's not the moment we actually got married. We got married 4 years after that moment. But it took 4 years to justify what I had already knew in my heart and in my soul, that God had appointed us together. And so for companies that you find that you love, you may find that you have a hunch and you know it, but it's going to take time to justify to your logical brain that this is it. And so a lot of investing is actually, not only is it physical, but it is very emotional and it's spiritual when it gets down to it. I'm so intertwined with the companies that I invest in, and with money making money, that I actually feel it in my spirit, whether something is a yay or a nay. Similarly to people, right? You meet people and sometimes they're for you, sometimes it's not for you, sometimes your spirit goes, sometimes it doesn't, right? Preaching? You guys track it? All right. Okay. So all that to say, yes, the steps can be listed in the chat. I'll put them after. And would be awesome too. I will also share this with you all. And so afterwards, in the next couple of days, I can give you guys a link and I can share it, and you guys can, I can send the slides to you, because I do know we're going kind of fast. And I'll do a recap too. I love doing recaps. And so when you're done matching each part of your life to a company or sector, this is when you have your beautiful method, right? This is how you've matched your personality to investments. You know that if you're just a sit back and chill kind of person, you're not going to do day trading. If you love the edge, the thrill, and you have some time, that's for you. If you know that you know nothing about biotech, you're not going to invest in biotech stocks, but maybe you purchase a fund, right? This is how it works. And honestly, we're in a perfect storm right now, with everything happening with a pandemic happening and pulling out of it, and people working from home and businesses shutting down, forcing businesses to open. We are in a very beautiful, perfect storm, right? And the fact is that even though unemployment is at an unprecedented high, and even though things are going crazy, the market has shown its resilience, and it always gets higher and higher. And even recently, you might be thinking, how the heck is the market still high? It just keeps getting higher and higher and higher. And this is even not the most recent screenshot of that, right? And there's also money in emerging markets. So it's not just our market. We're in a global situation here, kind of like how I mentioned that story earlier about India and the rupee and the companies that I saw that were there. We are global players. And so the system isn't created for the middle class, because they didn't teach us this. But guess what? We have the tools, right? People are making money the same way millionaires make money. And so you owe it to yourself to figure it out. And typically speaking, my goal is to have, within the next couple of years, I don't want to see headlines with people like this. This is great, but there needs to be more, right? This needs to have more color. This needs to have more flavor. This needs to be more vibrant. And if not only so that we can have our best, beautiful, fabulous, rich lives, but so that our children and younger generations can see that they can have it too. Right? You guys with me? So I want you to make a power move. I want you to make a commitment today that one single action can change the trajectory of your financial future. Right? And I'm not saying you're going to get this all on this 1 hour training, but what I want you to do is commit to the figuring it out. And so if you're going to commit to figuring it out, I want you to type, I'm going to figure this out. Because a year from now, I don't want us to have the same conversation. A year from now, God's willing, if we are having the same presentation, I want to see even more complex conversations. I want to say, hey, what companies did you guys do? What did you find with your personality? And I want to see all these different companies from all these different things that you've invested in, started researching, or even just started feeling as if you understand the conversation more. Cool. So I did want to leave some time for Q&A. And so before that, if you go to angelaematthews.com and put your email in the top bar or anywhere on the site, you're going to be on our list. And I continuously give complimentary information on investing in the stock market. Sometimes we have live trainings like this where we talk about only investing and or only a stock or what's happening in the market. And other times it might be a guide. Sometimes it might even be a wealth prayer, right? And so I think right now too, when you put your information and you actually get a wealth prayer on the page. And so we do fun things like that because really what I want is for investing to be fun, approachable, doable, and of course, permanent in your life. And so with that, I hope that you figured out which investment style matches your personality. And so I would love to take a moment to answer any questions that you all might have. So I will put the website www in the chat. AngelaEMatthews.com. Make sure that E is there. There's like hundreds of Angela Matthews in the world. Super common name. Yeah. And so, yeah, any questions? And so I see there's one question. Does anyone speak on Forex? So there will be other presenters in the series that will go into even more nitty gritty parts about investing. I kind of wanted to prime you all for them in doing it. And so any suggestions on where to start a brokerage account? I think you should have 2 brokerage accounts. And so remember, I'm huge on the short term and the long term, right? We doing short term stuff and we're doing short term things. And you get a short term account, which can be something just as simple as Robinhood. Or you can do a long-term thing where it's something just as simple as like Charles Schwab, TD Ameritrade. Those are my favorites as of late. I know that Chase has one and all these things have one, but you want something that you can grow into. So you've got like your one that you can use on your phone, right? An app, Robinhood, anything really you can use on your phone. And then you want something where you can actually pick up the phone and call them. And so remember a couple of weeks ago when things were going crazy with the market and Robinhood just stopped working, or you couldn't actually call Robinhood to see what was happening. You could call Charles Schwab, you could call TD Ameritrade, you can call real companies. So I always say, make sure you have someone where you can pick up the phone, dial a number, and ask questions about your money, because you're going to have some buku money in these accounts eventually. Like it starts ramping up. Like I started investing with $5,000 when I started, and it soon built into with the habits and the strategies and consistently, it ended up becoming 6 figures. And so I moved my money from simple apps to bigger companies because it meant a lot more to me. Awesome. And so I do use, in making my decisions, I do use investor reports sometimes. Like I said, remember, I usually have a pretty good gut feeling based on my interaction with the companies through my life and through my actual experiences. And what I'm doing is I'm finding evidence to support the decision. And so if I'm just dabbling, I'm only buying a couple of shares, I may not go super into investor reports. I may look to see if they actually met their quota. Like I'd go through earnings. So if you go to Yahoo Finance, you might see something where it says like their earnings, and it may have a red dot or a green dot. And depending on the color of the dot, they either missed their earnings or they hit it or superseded it, right? And so I want to see, Did they meet their earnings? What simply means, did you do what you said you were going to do? You said you were going to make this much money. Did you make it or did you not? And why didn't you make it if you didn't make it? Or why did you make it if you made it? And so that's how I handle investor reports. If I'm going to do like a really big investment, like if I'm purchasing 100 shares of a company or something crazy like that, well, heck yeah, I'm going to do my whole background search, right? Similar to what you would do if you were dating someone. If you're going to marry them, well, heck yeah, you want to do some like research and digging up and seeing what's going on with them. So it just depends. Do I recommend apps, and which would I recommend? And so there are apps, right? There's, like I said, there's Robinhood, there's Acorns, which invests money passively from your checking account. Though once you start learning what to do, you'll be better than Acorns. But if you don't do anything, they're good too. And those are apps that I like. They're easy. They're super easy. And so someone just asked, what type of things in the reports do I pay attention to? Like I said, I want to see how much money did you make? And I also want to see how much money you lost, right? And so I'm looking for that net number. Like when I take into account all the money you made and all the money you lost, are you positive or are you negative? Because Tesla, for an example, they just got profitable like a year ago. They were not a profitable company. All this time that they've been out, they have been negative, negative, negative. And so finally they turned a profit. And now they're like, to me, a more sound investment. So there are some companies that I own that have a negative cash balance, but not many. Most of my companies, I'm not going to give you my money if you don't know how to handle your own. So I make sure that they're positive personally. Do I subscribe to any advisor services? And so at the moment, no. I don't have any advisor services. I have throughout time used them, and I go off and on. So the way I treat my advisors personally, again, this is personal, is let's have a race to see who can make me more money. So I'm going to see if I'm winning and you're going to see if you're winning, and we can both race. Sometimes, most times, honestly, because I've been doing this for over 10 years, I've been investing for about 15 years now. So I've been investing for so long that I almost always win, but I don't know if I'm always in the race. I don't know if I'm always willing to be in the race, if that makes any sense. So like I said, we recently had, our son was recently born. So I was out the race for 9 to 10 months. I was also out the race. I'm still out the race because, he's very young and that's my priority. And so with that said, when you're out the race, your advisor can kind of make sure that things are going, right? Or your investments make sure that things are going. So I'm not in opposed to either, but at the moment we don't. But I'll probably get one again soon because I do want to focus on other things in addition to making my own investments. So any advice on diversification? Can you be too diversified or too little? Super question. You can be under diversified, but my way of diversification is a little different than the traditional. So traditional diversification means, do you have stocks? Do you have bonds? Do you have CDs? Like, what does your wealth map look like, right? Who's coming to your dinner party? And every kind of person represents a kind of asset. Well, at my dinner party, my diversification is, so how many of you guys represent tech? How many of you all represent financial services? How many of you all at my table represent healthcare? And honestly, I'm okay if I have more tech guys at my table than I have healthcare dudes or gals, simply because I love tech. And I started out in tech. I used to work at a web design firm. So I'm really good into tech. Versus if you work in a healthcare professional, at your dinner table, you're going to have more healthcare companies, right? You might not have as many tech. And so for me, that's diversification. You just want to make sure that you have enough people where it's going to be an interesting conversation. Does that make sense? I know that I'm really big, like I said, I'm a philosopher at heart and I teach through analogy, but I find that most people tend to understand things more if you can associate it with things that they're familiar with. And so it's almost like knowledge stacking. But if you understood it and if it was helpful to other people outside, then that's great. Do you ever use technical analysis in making investing decisions? Yeah, I do. And so if it's just a small amount of shares in a company, like 5, 10, I don't use as many technical analysis tools. But if I'm getting into a long-term relationship, that's when I do. And I'm not saying that it can't work. Like I have companies in my portfolio where I literally bought 3 shares and I didn't do any liquid technical analysis, and those companies like hit, right? It hit. However, when I want to reinvest in those companies, because you don't just buy it and just leave it and that's it, you should keep putting deposits in the relationship. Like for our relationship, we go on date nights, we're putting deposits into the relationship. You want to do that, right? And so when I do that, that's when I'm going to start getting more into the technical analysis and those indicators, right? I want to know what your trends are. I want to look at your history. I'm going to look at the graphs. I'm going to look at to see how much volume is happening with your company over a set period of time. And I will say that for technical analysis, the longer you plan to hold the relationship, the less you need to do. And so again, I'm in going with the analogy of dating, the longer I'm married, the longer I have to get to know this person, right? We're doing a lifetime thing. So I don't need to get to know something about you every single minute of the day. However, if I only had like 3 months to know you, that means I have to spend a lot more time in my day knowing you. And so if you're going to hold the company for a shorter amount of time and you want a larger return, then you're going to have to do way more technical analysis to make your decision. Versus if you're planning on holding them for a longer period of time, you can spend less time every day figuring them out because it's a longer term relationship. All right. What do you think of Kathy Wood and ARK ETFs? I'm not familiar with them. I'd have to actually do a separate entire analysis. But I would say if you go to our site and put your name, we do hold investor town halls where people just submit their companies. And similar to this, we just talk specifically only about companies. But I'd be able to help you out more there. But I don't want to take up too much time because I want to get to as many people's questions as possible. How do you deal with buyer's remorse when you didn't buy enough shares of a company that hit? Oh, it's true. It happens. I actually call it the great white buffalo. It's like the one that got away. And we have a training specifically on the great white buffalo. And so the only way to do it is to just hop in. I wish I bought more shares of Tesla. Honestly. And when I started realizing that now they're an okay company and understanding the game that I'm playing with, that I do not think that they will be around forever, that yes, I do think competition will come in and sweep them away within like 20 years, and I don't plan on holding them forever. This said, I still wish I bought more. You're always going to wish you bought more. And it's always going to be hard to pay more for something that you paid at a cheaper price. So yeah, I paid, $200 for Tesla. And right now I'll tell you right now, and now it's hovering over 796. It's going to hurt paying for that. But guess what? I still buy Tesla every single month. I may not purchase a whole share because it's just crazy. I may not purchase a whole share, but I'll play a little bit. And so that's my advice. You still have to get in if the company is doing well. It's just proving to you that they're that strong of a company, or at least that strong of an investment that other people value it. And so Summer just popped up. So
well, thank you so much, Angela. This has been so rich. Everyone, what a privilege it is. We just received amazing information at the cost of zero. So we appreciate what you gave us tonight. And everyone, as I mentioned at the beginning, we're building, and she has set an amazing tone for us for the next few weeks. But the knowledge building keeps building, as she alluded to earlier. And we're going to keep growing in our knowledge and investing. Next week, we have Courtney from the Ivy Investor, and she is a resource. The Ivy Investor is a resource for women seeking to navigate the maze of the investment world in ways that make sense. Courtney is a current attorney and a former stockbroker and investment advisor with 15 years of experience in the financial services industry. She has a unique, engaging style. It breaks down the stock market, retirement, college savings in a very engaging way that will make you want to run out and take action. So if you were excited about what you got tonight, we're building on that next week as well with Courtney. So please come back and join us next week as we continue to build our knowledge. Thank you all again. Angela, we thank you for the wealth of knowledge you brought us today. And as you can see, the questions were rolling in. So people want to hear more. So we're thankful for what you have. Next week we will be here on Thursday. All right. But remember, it's the same link that you use tonight. You will, I'm so sorry. Next session is on Thursday. I keep saying next week. The next session is on Thursday. Thank you, Brenton. So use the same link, jump on as we continue to build our knowledge. We're going to close out with prayer, and everyone will have a good evening. Let's pray. Lord, thank you so much for this day. Thank you for the knowledge that you have given us through Angela this evening. Be with us as we continue to try to be good stewards of what you have given us. Bless us and bring us back together Thursday. In your name I do pray. Amen. All right, everyone, have a good evening. Thank you for attending. See you Thursday, same link.